There's this op-ed, speaking of op-eds, by Nouriel Roubini today, which raises some interesting questions, guys, of sort of all the risks. Maybe the biggest wild card for 2019 is the president himself. Roubini writing in the headline is pretty provocative. President Trump flirting with mutually assured economic destruction, that the markets are finally, David, waking up to Donald Trump as president and all that comes with it, policies which Roubini really takes apart, the stagflationary effects of a lot of it, this economic Cold War with China, immigration being bad for jobs, the sugar high of the tax cuts, this notion that, you know, the markets were willing to say, okay, the president was all bark, no bite. Now it's the reality of there's a lot of bite with that bark.
Exactly, and we started out with corporate tax reform where people in the business community were like, okay, you know, I can deal with some of the noise because the outcome is a net positive. Now we've moved on to trade, where obviously the worst case scenario would be quite detrimental to both the markets and the economy. And so, you know, as we think about the trajectory for politics and policy next year, you know, I think people are going to really need to focus in on the signal and kind of ignore the noise. I think that there will continue to be noise out of not only Washington, but out of the UK and Italy and really major economies around the world. But focusing on what can actually affect policy is going to be particularly important. That said, it is a little less friendly than it was in 2017.
Well, speaking of that, I mean, big news today, Jared. Democratic Senator Elizabeth Warren, everybody's talking about it, officially launching an exploratory committee for 2020. I think investors need to know and want to know right now whether 2020 Democrats are going to be the party of Elizabeth Warren or the party of someone a little bit more moderate, perhaps like a Mike Bloomberg. How do you answer that?
Democrats themselves don't know that yet. That's how I answer it, and I'm sure I'm right about that. It's going to be a big field. It's no surprise that she got in, although I grant you it's breaking news. I think that the kind of progressive to moderate continuum will be reflected on what I'm pretty sure is going to be a large primary stage. I mean, the Democratic Party is not all about the far left progressive wing. I mean, that's an important part of the party. It's more important than it's ever been. And frankly, I share many of its aspirations for much better policy, whether we're talking about health care, inequality, fiscal policy, taxes. So, you know, I think there are a lot of great aspirations there. But there still is a moderate wing in the party, and that will be represented as well. Listen, just quickly getting back to the economy for a second, you know, I do think that one way to look at this is a strong American consumer, you know, against the other components of GDP. In a way, it's C versus, you know, I plus G plus net exports. Government is going to be fading in terms of fiscal policy. The investment promises of the tax cut have disappointed, and I think we're going to be looking at increasingly negative net exports. But the consumer remains really strong, and you can never discount the American consumer. We're a 70% consumption economy.